Well, I think from a corporate treasury perspective, you've got to think about capital allocation and what your return on that capital is. And should you have some Bitcoin? Should you have some Ethereum? Probably, just as a way to diversify your US dollar holdings on your balance sheet. And I actually think you're going to start to see financial institutions transact point to point in Ethereum globally in the next couple of years.
This episode is brought to you by iTrust Capital. iTrust Capital gives you a great alternative for buying, selling, and custodying your crypto assets. They allow you to set up a self-directed IRA, which gives you huge tax advantages. You can even roll over your 401k to this platform. And they not only offer crypto, they also offer gold and silver. And as mentioned, the custody gives you another very safe alternative. So many of you know about self-custody. That's a great option, but you can also use iTrust Capital's premium custody accounts, also known as PCA. So with the rise of crypto scams and phishing attacks, a lot of retail investors are losing their shirts. I mean, let's be honest, right? It sucks to hear that exchanges are getting hacked. Well, iTrust Capital does things a bit different here. They use Fortis Bank as their qualified custodian. So they're actually using a bank here, and they have partnerships with Coinbase, Prime, Fidelity, and Fireblocks. They are fully US based, and their client experience team offers direct phone support. So not many platforms offer this. This is very unique to iTrust Capital. And folks, most recently, we heard from President Trump that the United States is looking to unlock 401ks to be able to participate in crypto. Well, you can get ahead of the curve by using iTrust Capital and getting started in that process. And folks, I'm a user of the platform. I have an account with them. If you sign up with my link, which is itrustcapital.com/thinkingcrypto, you can get an exclusive $100 funding bonus. So go learn about this great, safe, and awesome way to buy, sell, and custody your crypto. A great alternative, once again, with tax advantages and a lot of safety, very safe compared to many exchanges. And all the links will be in the description. Check it out. Hey folks, welcome into the Thinking Crypto podcast. I'm your host, Tony Edward, and joining me today is McAndrew Rudisill, who is the board chair for ETHZilla. McAndrew, great to have you.
Great to be here, Tony. Thanks a lot.
Yeah, excited to chat with you because ETHZilla, previously known as 180 Life Sciences, just rebranded, of course. And as a result, of adding an Ethereum Treasury strategy. And I want to explore all the things you guys are working on, your initiatives, and much more. But let's kick it off with your background. Tell us a bit about yourself and your professional background.
Sure. I spent about 15 years on Wall Street, primarily as a hedge fund manager. Was a Tiger Cub, worked under Julian Robertson. After that, went on to build and start quite a few different businesses, many of which I've sold, partnered with a lot of the biggest PE funds in the US to build those businesses and monetized most of them. So started investing in Bitcoin and Ethereum about 5 years ago, and I've really focused on it ever since.
What was your first encounter with Bitcoin and crypto, and what was your aha moment that you made you have the decision or the moment of saying, I'm going to invest in this?
I think with Bitcoin, it started in around 2020. And I think I was listening to a podcast that Michael Saylor was on talking about Bitcoin at the time. And I remember it was around 10,000. And I said, you know what, it's probably worth buying a Bitcoin or two. Gradually started to get involved, listened to what he was saying. And then, Bitcoin started to rally from that point forward. We went through a little bit of crypto winter in 2022, and that's when I started reading more about Ethereum and all the use cases and applications that you could do with Ethereum, and just got really interested and realized, hey, there's a huge opportunity here in the global monetary system to use digital assets to bring real world assets on chain, but then there's a lot of unique things going on in the Ethereum network. So between those two things, it just seemed like we were at a confluence point where there would be wide scale adoption in digital assets between what was going on with Bitcoin kind of as digital gold, and then Ethereum as really what looked to me like digital oil. And that's what it's turning out to be.
A follow-up question on that, because you mentioned ETH being kind of digital oil, and a lot of building is happening on Ethereum, stable coins, tokenized assets, tokenization of real-world assets. And it seems like this asset class, this technology is kind of a black hole sucking in TradFi, so to speak, and all the traditional assets that are going to be tokenized. Do you see it that way, given your perspective in TradFi and in hedge fund world and much more?
Yeah, Tony. I mean, let's address stable coins first. I mean, there's what $240 billion of stable coins in the market. Of those stable coins, 220 billion, the top two, US Tether and USDC, are both Ethereum based coins. I think the total capitalization of stable coins just continues to go up because they're a really easy way to transfer money. And then I think if you look at Ethereum and what Ethereum really is, it gives you a lot of optionality in how you create privacy layers to create tokens, to create stable coins, to use it to bring real world assets on chain. But I think most importantly, what I've come to understand about Ethereum is you're really tapping into global money supply. Most of the world transacts in US dollars in one shape or another. And a lot of people don't have immediate access to US dollars at a ground level, but they can get access to Ethereum on their phone. And so when you think about the total supply of money in the world, and this is aggregating all the currencies and then people wanting access to US dollars, what you're getting in level one Ethereum is access to M1 and M2. And then you get the multiplication effect as transactional volume starts to rise on the network as a whole. I think you're going to just start to see an upslope in the use of Ethereum as all these use cases start to come into the marketplace.
So is that part of why Ethereum was chosen as the treasury strategy as opposed to Bitcoin or Solana for ETHZilla?
Yeah. So my fund, Harbor Island, we've invested in a company called Etherealize, and we co-invested with Electric Capital in this company. And Etherealize was formed by a lot of DeFi founders that actually helped found the Ethereum network and manage it. And what we set it up to do was to bring real world yield assets on chain. And we are really interested at ETHZilla in three things. Number one, having the upside associated with transaction volume rising on Ethereum, which we think makes the price ultimately go up a lot. Two, generating yield on Ethereum in partnership with Electric Capital, who's one of the largest crypto VC investors in the US. I think they have 3.5 billion of AUM under management right now, and they have a huge DeFi staking protocol in place, which we're partnering with them on. And then thirdly, working with Etherealize and that team to onboard these real world assets with ETHZilla to get that yield on chain. And when you think about just the total quantum of capital out there that's transacting normal way, leverage loans, CLOs, structured debt that could be brought on chain, the numbers in the trillions. And that's what ETHZilla was built to access. And that's why we're focused on Ethereum.
Tell us a bit about 180 Life Sciences Corp and what its business was about and why the decision for this company to rebrand and form that Ethereum treasury strategy.
Sure. I'm going to answer you directly at first. 180 Life had a couple neurology-based biotech drugs that they were working on. And then they had also pivoted into an iGaming platform. So I think they'd spent a couple years working on a variety of different projects that, various levels of success. And we ran into 180 Life because we were actually searching for a small NASDAQ listed company that had a clean balance sheet that we could invest in to execute on this Ethereum treasury structure. And they had all the right building blocks in place at 180 to do that. So they had a shelf registration that was available for us to access post doing a transaction. They had a board of directors that was really easy to work with that had a good background in traditional finance. And then lastly, a clean balance sheet and a really, it was well set up basically to accept capital. And that's why we partnered with 180 to do this deal. And we're going to continue to fund their ongoing operations to see some of those through. But the primary focus going forward is going to be on ETHZilla.
And that's something that fascinates me. Like these companies that do take these approach, do they keep the same business model, and services and so forth, in addition to having the treasury aspect of the business, bringing in additional revenue and so forth? So will they continue their, kind of ethos of the business and services, or will they ramp down on that end?
I think you'll see it ramp down over a long period of time. But I mean, if you look at it on a percentage basis, ETHZilla is a huge percentage of the business today. But they've still got those operations that we're going to continue to fund.
Okay, that definitely makes sense. And then I read that you guys you raised $425 million in funding. Tell us a bit about that and who are some of the participants? I think you mentioned Electric Capital earlier.
Yeah, Electric Capital and my firm Harbor Island were the anchor investors in the deal. But we brought in a lot of DeFi founders who have built some of the largest Ethereum protocols. So this was a vehicle that was built for the Ethereum community, and we got that support. And then we got support from some really large digital asset investors out there, as well as traditional finance investors. So I actually view this as the marriage of, Wall Street, Silicon Valley, and the DeFi community came together as one to invest in this vehicle because I think they believed in the vision of the business model.
Got it. And then with the rebrand, is the stock ticker still the same, or will that change as well for the, given that 180 was a publicly traded company?
It will change. We have to wait on the exchange approval to make the ticker change, but it'll be, aligned with the name of ETHZilla.
Got it. Now, a big part of Ethereum is the staking rewards, the yield that's naturally built into the protocol. How will that yield be used? Will it be paid out in dividends, or will it be reinvested?
Okay, great question. So we set this up as a business purposefully, and the yield will continue to spin and grow. And the absolute margins on this business are pretty high because of the way the yield is structured with the partnership with Electric. So through a combination of restaking, lending, liquidity provisioning, yield farming, and private agreements with other tokenization companies, we can generate like a high single digit yield on the Ethereum assets within the network. And this is excluding any real world asset yield that's brought on chain. We'll use that cash flow we can buy back stock, we can buy more Ethereum, we can reinvest it in other yield farming operations. So for every $1 billion of capital that we have deployed, I think you can approximately say the business will generate $40 to $50 million of EBITDA conservatively. It's a pretty interesting business from that perspective. You think about the quantum of capital that we can put to work through ETHZilla.
So it sounds like you have a mixed bag, or kind of multi-tier strategy. It's not just the natural staking on the protocol, but you mentioned like tokenized funds, maybe money market funds and things like that generate yield, DeFi, borrowing and lending. So it sounds like a multifaceted strategy.
I mean, that's exactly right. We're going to access all portals of the Ethereum network to generate yield. But I can't emphasize enough that I think one of the key components is over time is there's going to be this merge of real world yield on chain, which ETHZilla should benefit from the convergence of.
This may be a hard question to answer, but with many of these public companies taking this strategy, a crypto treasury strategy, and I think ETH is probably one of the leader, probably better than Bitcoin because of the naturally built-in yield and all the things you can do with DeFi. But what do you think is the lifespan of such an initiative where eventually the asset becomes so mature, there's less volatility, there's more liquidity, but there's less volatility? Is this like a 10, 20-year timeline?
I think about this a lot like the early transactional networks that you saw with debit cards and credit cards in the 1980s. And I turn it back around to you. I mean, do you still carry around a credit card? So the answer is yeah, most of us do. And, I think what's cool about this is a lot of things are going to shift on chain. I think most of that is going to go through Ethereum. And as that occurs, we're kind of going to be at the confluence with ETHZilla of this transactional volume ramp, both from the DeFi space and the TradFi space. And when you put the two together, it's a giant sum because it's a global game that you're playing. And I think we're actually in the very early innings of that network adoption. And that's why we're focused on this. So it's a multi-decade investment is the way we're looking at it.
Absolutely. Tell us a bit about how the assets, the ETH assets and other things that may be coming on chain are being custodied. Who's your custodian and the security setups that you have?
Sure. Well, we went blue chip purposefully on this. So Coinbase is our primary custodian to start. We'll likely onboard Anchorage at some point in the near future. And then from a brokerage perspective, work with some of the biggest brokers, Galaxy, DRW, and Electric is our asset manager at the outset. And as I said, they're probably one of the largest DeFi asset managers in the world.
Got it. Yeah. Very familiar with those custodians and so forth. Coinbase, of course, Anchorage. Um, does it make sense as you build this strategy out and everything's working well that you look to acquire other companies and become like a larger holding company, so to speak? I don't know if that makes sense, but would that be
Yeah.
possible?
Well, Tony, I feel like we just had a couple of these Ethereum treasury companies go public. I would never want to say, that we're thinking about acquiring anything right now. We just went public ourselves, or just did this pipe transaction rather. But I do think in the long run, there's naturally going to be some consolidation in the space, depending on what other treasury companies have a different business model than what ETHZilla is today. We're setting it up so that we're going to have a really strong balance sheet and we're going to be in a position to think strategically. But I think at this point in time, like where we are in the cycle, you'll probably just see more treasury companies come into the marketplace, and there won't be consolidation for quite a while until there's more of a proliferation of these things.
On the Michael Saylor front, right? What he's doing with strategy and Bitcoin and the amount of capital he's raised.
Yeah.
Is there a ceiling to, he's called it like the infinite money loop or something like that, right? Because of, how it's all set up with fiat and so forth. Is there a ceiling to the amount of capital you guys would raise to buy ETH?
Well, I think the business model is actually set up so that we can continually, as long as we're trading at a premium to MNAV, we can strategically raise capital off of our ATM. But you referenced what Michael Saylor's done. He's used all the traditional finance tools to raise capital to grow MicroStrategy, and we have a great base. ETHZilla, between Jason New, I was the vice chairman of Lazard, who's coming onto the board, and myself. We've got a great base to use all those same tools, redeem preferreds, bond offerings, term loans, and we can think about all that when the time is right in the market. So we've got access to a lot of capital. I think it's how and when you use it. And so at the outset, equity is probably the best thing to use to add more Ethereum. But there's obviously Ethereum's got a very large market cap, $400+ billion. Like, we only need to be a tiny percentage of that total market cap, and ETHZilla is multiple times larger than it is today, which is a good thing from like an ETH per share perspective for our shareholders.
Yeah, absolutely. Now we've seen markets move in cycles. There's been bear markets and obviously downturns in the crypto market. And I'm curious how you're planning ahead for bear markets and how that will affect your ETH holdings if the value goes down. But also, will you be kind of okay because you have once again, the DeFi component, the staking yield, and so forth?
All right, lots of parts to that question. I'm going to just take it in three parts. From a cycle perspective, I think we're in a bull cycle on ETH right now, and it probably continues. And if we do get some rate cuts in the United States, I think it's going to, there's more upside in ETH. That being said, long term, 2026 onwards, we are preparing the balance sheet for a potential bear market in Ethereum. So to do that, what you don't want to do is add too much leverage, which we're not doing. And then you want to keep a lot of both ETH and some USD cash on the balance sheet so that so if you do get compression in ETH prices, that you can weather it. And if you're not levered, you can ride it out. And that's generally our strategy, is keep stacking ETH, use a bear market to come out on the other side with a lot more.
And then I think going back to the staking and DeFi component, that can help you weather the storm in any market downturn, right? Because you have that constant.
Oh, for sure. You've got monthly cash flow. I mean, it's real free cash that we'll be generating. You're not as opposed to Bitcoin, where you're betting solely on appreciation. With Ethereum, you're betting on yield, and it's got a very separate yield curve from the global yield curve.
Does it make sense that eventually, and this may be very early to answer this question at all, let's say 3 years from now, your ETH strategy is doing really well, you continue to grow your ETH holdings, but there may be opportunity to bring in other assets, crypto assets, and maybe have a kind of a basket strategy. Do you think
Mm-hmm.
that's something that's may be on the horizon?
I think for this group and this vehicle and all of our investors, everyone is very ETH focused. So we are going to stay solely focused on the Ethereum network and everything you can do with that, and let people invest in other digital assets through other vehicles or directly in those assets. Like we're going to stay focused on Ethereum.
So as this crypto asset class grows and there's more tokenization on these protocols like ETH, Solana, and others, do you see more publicly traded companies doing this, even the larger ones? And maybe they'll be the laggards, but a lot more of the folks in the Nasdaq top 100 or more, and the S&P 500, they start adopting this strategy, whether it be Bitcoin, ETH. Do you think we're going to see this trend continue?
Well, I think from a corporate treasury perspective, you've got to think about capital allocation and what your return on that capital is. And should you have some Bitcoin? Should you have some Ethereum? Probably, just as a way to diversify your U.S. dollar holdings on your balance sheet. And I actually think you're going to start to see financial institutions transact point to point in Ethereum globally in the next couple of years in the way they transact assets. So they'll end up just naturally holding Ethereum based or tokenized assets on their balance sheets. So they're going to have to hold some. And if you just think about that tiny percentage change in all these companies starting to have a small portion of their treasury assets in either tokenized assets or some amount of cash equivalents in digital assets, it's a big amount of dollars.
Are there any risks to this strategy? I don't know how much you can share here, but things that you guys
Yeah.
look at, like, hey, we got to watch out for this. And one of the things we mentioned earlier was market downturns, but anything else?
Well, I'd say number one is the price of Ethereum. I mean, we had a big drawdown just in April in Ethereum alone, right? So you've got to be willing to withstand the volatility of Ethereum, number one, to be invested. But two, I think you have to be just super careful on a risk management side about tokenization deals that you're doing and what percentage of the portfolio is going into that versus typical yield farming and liquidity provisioning. And that's why we're partnering with Electric, so that they can think through that. So a much smaller percentage of our portfolio is like new tokens, so to speak, and a much larger percentage is restaking, lending, much lower risk, moderate yield activities.
Yeah, that's great that you have the folks at Electric Capital. And I've had one of the founders on over the years talking about their strategy. And obviously, they're living and breathing crypto.
Yeah.
And it's great that you have them as a kind of managing a lot of the crypto related items.
Yeah, no, we're lucky to have them as a partner, and they were very influential in the name, which was cool.
Yeah. When I saw the name, I was like, whoa, they're really going all in
Going
on
for
ETH.
it.
Yeah.
We're
I
going to eat
love
up a
it.
lot of ETH.
Yeah, for sure. So what's on your roadmap? I know obviously you just had the rebranding and the launch. So a lot on your plate right now, but what can we expect maybe in 6 months or so?
I think we'll stack a lot of ETH. We're looking at a lot of creative partnerships on the yield framework side, and then I think there's some pretty interesting stuff that we can do from a marketing perspective too. I mean, there's not many people that understand Ethereum, I think, globally yet on a percentage basis, and I think part of our job is just to get out there and explain to everyone what Ethereum is, and so we're going to really be actively doing that, and doing it on Wall Street and doing it on Main Street.
Yeah, that definitely makes sense. There's still billions of people who don't know what all this technology is and what it's about and the use cases and so forth. So a lot of education that's needed. Um, I don't know if this makes sense, but just a question that came to mind. So obviously there's ETFs for stocks and different categories of stocks, but the fact that you're holding, and there's also crypto ETFs, right? You have Ethereum, Bitcoin, and so forth. But now with you holding ETH on your balance sheet, does that change anything with the ETF setup? Does it open up new opportunities? And this may be a question you can't answer because you're not an ETF issuer, but curious if
Yeah.
you had any thoughts on that front.
Well, I think the ETFs are very different from what we are. I mean, the ETFs hold Ethereum and charge their holders a fee. We hold Ethereum and generate yield. So our investors effectively are getting cash flow for being invested with us, and we're not charging them a fee to do that. So it's kind of a different business model. If you're buying an ETF, it's probably because you just don't want to buy it on Coinbase. Or if you're buying us, I think you're actually investing in a business and you're investing in the possibility of network expansion and yield expansion. I think of it as a totally separate way to invest.
Yeah, that makes sense. And I guess we'll have to wait and see if anybody gets creative and creates a new type of ETF, new type of product, given many companies who
Like
are
a treasury ETF. I mean, that's probably the next thing is they'll roll up
sure
treasury vehicles into one ETF.
get exposure to all the Bitcoin treasury companies, all the ETH treasury companies, or a mixture of both, or things like that.
Exactly. Well, that's probably inevitable, Tony.
Yeah, yeah, for sure. Um, I would love to get your take on what's happening in the general market. We just recently had the Genius Act passed into law in the United States, which is a stablecoin legislation. What are your thoughts on that and what it means for the stablecoin market?
Look, I mean, we have a really supportive government and regulatory framework in the US, and that was the catalyst early in the year when we started to focus on executing on ETHZilla as a team. We just thought the time was right. I think the US is making the right decision to take the lead in becoming the global leader in digital assets. I mean, it's literally, I think the rest of the world is going to follow suit because of how important it is just to financial networks. So I'm hugely supportive of what the government's doing and the regulatory framework they're putting. The more regulation they put around digital assets in the US, the easier it is going to be to operate going forward.
Oh, for sure. So on that note, the Clarity Act that is expected to pass late September into October. White House crypto czar, as they call him, David Sachs, said that was
Yeah.
kind of the timeline. The Senate will pass the bill. Um, that is, kind of the meat and potatoes of the addressing certain things in the crypto market, CFTC, SEC, DeFi, and so forth. Right now, you guys are able to add ETH to your balance sheet. Doesn't seem like that will necessarily change anything for you, but it will probably allow for more adoption of the ETH protocol and the asset itself. Do you foresee that affecting your business anyway? And I'm talking positively, not negatively or anything like that.
Yeah. I think we're going to have to wait to see what all the details of the Clarity Act are. But I think the categorization of investment contract assets and permitted payment via stable coins is going to really open things up. I mean, it's a lot easier to move money around. Think about how, like, you pay $35 for a Fed wire and it takes a couple hours to move it. You can send someone as much money as you want with Ethereum in 20 seconds. So same thing with a stable coin. And I think that's going to open things up a lot in the financial market. And from what I'm just seeing on our side is there's a lot of institutional interest from large private equity funds and banks and just how to operate in this marketplace and how things are going to change. And I think the act is going to help to clarify it even further.
So do you believe like there's still a lot of liquidity or capital sitting on the sidelines? They can't touch it yet, like the banks, right? But once we have these laws in place, they will be able to freely enter.
I think just from a yes, I think from a pure cost perspective, why would you not? If it takes you a couple people to transact a loan portfolio and it takes 30 days to execute on that transaction with a bunch of faxes and paper going back and forth, and you can suddenly do it a lot more easily because of some regulation. Banks are all about cutting costs and generating more revenue. I think you're going to see it happen.
Mm. One of the big things that are being worked on by a lot of TradFi institutions is tokenization of assets. BlackRock, Fidelity, Franklin Templeton, and many more have been putting money market funds on chain. There's a big move towards putting stocks on chain. And that's going to create kind of a truly global asset class because you mentioned earlier, you just need a phone, smartphone, and you can access some of these assets and the protocol. And then you're going to have almost like 24/7 trading markets, right? No more opening and closing bell and so on and so forth. Do you see these assets and even like, for example, ETHZilla stock now being
Yeah.
open to the world and bringing in more liquidity?
Tony, that is just like such a it's a great question. It's complicated, and we'll hit a couple points on it. As a former public equity investor, the thought of 24-hour trading does make me get a little bit worried from a stock market perspective. But I do think you're going to have U.S. listed stocks issue tokens on some of the bigger ATS exchanges in the US and globally once we're allowed from a regulatory framework. And then, yeah, they can trade 24/7. I do think the market, though, always gravitates toward liquidity, and the stock markets today are great sources of liquidity for like the companies globally. The commodity markets are pretty well set up. Where I actually think you're going to see the biggest impact from this is in the debt capital markets, and then in some real world asset markets like real estate, for example. It shouldn't take so long to transact in real world assets with all the paperwork that we have in place when you can have a completely confidential blockchain put in place on the Ethereum network. And whether you want it to be on level 1 or level 2, use it to execute on the transaction of that asset, whether it be a loan or a piece of real estate or an aircraft. I mean, there's so many different ways that this is going to, I think, unfold and allow people to then transact in assets on exchanges. So that's what gets me really excited about this. I do think that the stocks are going to be a component of it, but it's going to filter down to everything.
Yeah, that definitely makes sense. McAndrew, great stuff. And
Yeah,
I love what you guys are doing, and I'm looking forward to future updates. I got some wrap up questions here for you.
yeah.
First, if you could create your own metaverse, what would the theme be?
I think it'd be South Island in New Zealand.
Nice. Rapid fire questions. Favorite food?
I love fresh tuna tartare.
Favorite musician or band?
The old school Bob Marley and the Wailers.
Favorite movie?
Caddyshack.
I love that movie.
Oh
Rodney Dangerfield. Yeah.
yeah, The
Favorite book?
Judge. Favorite book. I love a book called The Cruiser's Guide to the Northern Bahamas because I've got a boat and I like to read about the different places to go in the Bahamas.
Very cool. And you may have answered this, but when you're not working, what are you doing for fun? Is it sailing?
I love to ski and I love to fish.
Good stuff, McAndrew. Thank you so
All
much
right.
for joining me and taking the time. And we'll look forward to having you back on as things progress with ETHZilla. But thank you so much for joining me.
Definitely. Thank you for having me. Nice to meet you, Tony.